Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, and I'm joined by my co-host Kevin Hinks. But let's take a look at the overall four major indices. With the S&P 500 up nearly 1.6%, Nasdaq leading the way up 1.8%, Dow Jones Industrial Average up 1.5%, and the Russell up 31 points, up 1.4% on the session, as the risk on trade is in full risk on mode. All right, let's bring in our next guest, and that's going to be Landon Swan. He's a co-founder of LikeFolio.com. Hey, Landon, we're talking streaming here today, and I wanted to talk about this. Netflix has earnings next week. The stock's done real well. It just hit more all-time highs. People are watching the Squid Games program. Out of LikeFolio, what kind of data are you guys seeing for this? Because it seems like the stock is continuing to move higher, even though maybe a little bit of saturation here in the U.S.
Yeah, absolutely. You got saturation in the U.S. And when you talk about streaming, it's basically Netflix. I mean, there's a lot of competition out there, but on a volume basis, Netflix is a huge holder of the market share, especially when you're talking about U.S. mentions of people talking about which service they're looking at. So we're seeing, you do mention that they're reporting earnings next week. You know, we do that earnings score. This is kind of interesting, from negative 100 to positive 100. And if they would have reported last week, we would have had a negative 16 on them. Right now, if they were about to report, we'd have a plus 12. They're moving higher going into earnings. A lot of it does have to do with the Squid Game. A lot of it has to do with the fact that it's cooling off. People are less likely to go outdoors. They're more likely to sit back and stream. And of course, that means watch Netflix. So they've had a lot of success. I mean, the fact that the stock is at all-time highs, doesn't really care what the market's doing. It's just crushing it. And, you know, the last little sell-off over the last week or two reversed, of course, today, but still Netflix basically at all-time highs. And what's interesting is the expected move seems to be pretty low. I mean, it's got around 3.6% expected move for next Friday. And that is a lot lower than the average moves over the last four earnings reports. So that's something that we're looking at, possibly an opportunity to buy premium. I know you guys were talking about that on the last segment. You know, how is this season shaping up? And that might be the way to go here. But we're seeing mentions of people talking about canceling Netflix at all-time lows, at 3-year lows, actually. It's been down every month in 2021. Less and less people are talking about canceling. More and more people are talking about signing up. And a lot of it, you can see on the chart here, which shows people are talking about. These are all Netflix shows. The further to the right, or more people are talking about that show. And then the up and down axis, the y-axis, is the happiness around that show. So you can see where Squid Game actually falls. I think the fact that it's lined up with Black Mirror makes a lot of sense. It's very dark. It's very similar to Black Mirror, but it is getting a ton of eyeballs. That plus you got the fact that, you know, they've added more traditional shows like Seinfeld on there now, and so you've got a lot of people coming into Netflix, very happy customers. Either they're finding a program that they love that maybe not a people follow, like the Queen's Gambit or Bridgerton, or they're just following on the bandwagon with these really wild shows like Squid Game. So they're getting a ton of people coming in, and not many people are leaving. Obviously, a recipe for success when you've got a revenue model like they do.
Landon, when you look at what Netflix is doing, and you look at the popularity of this show, Squid Game, and it's popular in the United States, but it's really setting themselves up for international growth, right? And I think if you look at what Netflix is doing, they're setting themselves up for international growth. You know, a very popular topic is that they're reaching saturation here in the United States. Well, the growth for them has to be these other countries, right? And Squid Game, though it doesn't seem palatable to United States residents, they still watch it, but it's international. It's having a huge effect. And some of their acquisitions, they're buying, like Disney did with Star Wars, they're buying franchises, right? And franchises lead to other shows that they can keep churning out, like Disney does with Star Wars. They bought the Ronald Dahl Story Company, right? Doesn't sound very important, except they've sold 300 million books, here it comes, in 63 languages. right? So they keep adding these franchises in that's building this international base. And I've got something to think about for all our viewers. China has 1.4 billion people in their country. There's no Netflix yet in China, Landon.
Amazing. Yeah, I think they are completely saturated in the U.S. I mean, it's very hard to find someone who doesn't subscribe to Netflix in the United States because it's cheap. It's the best option out there. We have fantastic internet in the U.S. and everyone has it. And so obviously that's fantastic for the company. But as an investor, you're saying, okay, well, where's the growth coming from? And you can see here again. Remember, LikeFolio focuses on English-speaking tweets. So when people are talking about streaming, this is how the pie chart shapes up. Netflix is streaming. I mean, all the others add up to what is that, 22%? I mean, it's nothing. And you're talking about really large companies, really successful, great streaming platforms, but they're just not competing with Netflix. So Netflix is it in the United States. And so they're smart. They know they have to go out after these other markets. And it's interesting that that this one show, Squid Game, obviously it's South Korean in nature. That's where all the actors are. That's the natural language of the show. But it's actually succeeding in the U.S., being dubbed over in English, which is amazing. And I think that really, not only does it speak to, their efforts and maybe the quality of the show. I think the quality of the show is kind of so-so. But if you look at how it got there, the reason that I saw it was because it was #1 in the nation on Netflix. So when I open up Netflix, there it is. It's inviting you to watch. So they have the power of distribution to force their shows to the top, whether or not it's the highest quality show. And so that is a very powerful platform to deliver on perceived quality, because as you guys know, original content is king in this space. So they can force eyeballs onto their original content because they own the platform. When you're logging in, they can say, hey, you should watch this. And that's a very effective marketing strategy.
Landon, I want a new season of Peaky Blinders. And like a year ago, I wanted a new season. That's the one I'm waiting for. But if you take a look at this comparison between Disney and Netflix, Disney, through all their platforms, whether it's Hulu, ESPN, Disney Plus, they're at over 173 million subscribers already. And you mentioned that Netflix is cheap. Netflix costs more, on average generating $14.54 in average monthly revenue per subscriber in the U.S. But if you look at Disney Plus, they're only generating about $4.16. So doesn't Disney have the ability to raise prices more than Netflix? Because you mentioned it's saturated here in the U.S. because of the fact that, hey, 5 people are using the same login number, right? Why wouldn't you, just use somebody else's? So if you look at it from that perspective, does Disney have the better upside in this particular space, or is it all based on content that Netflix is delivering?
Right. I think for upside, Disney has growth potential in the U.S. and, of course, international. Netflix, really, growth potential is done in the U.S. I think they've hit their cap. Now it's all international. I would argue that they're both cheap, even though, Disney's less than half of Netflix. It's still cheap. $15 a month is not a lot of money, especially when you're talking about, 10 years ago, cable bills were $40, $50, $100 a month. So it's just, especially when you look at the number of hours that people are watching, I think the advantage that Netflix has over Disney is the amount of new content that they're pushing out. I think Disney's starting to catch up, but they started with, here's all our legacy shows and movies. You can watch those anytime you want. And, you can blow through that library pretty quickly, or at least your favorites pretty quickly. And so it's all about that new content. People want the next season, just like you're talking about. And so Netflix is delivering on that. A little side note, though, what's interesting about Disney Plus, I think I've mentioned this on the show before, is when they launched Disney Plus, that was one of the biggest days for Netflix, because people got Disney Plus and they said, okay, how do I access it? Oh, okay, I get a Roku. Okay, now that I'm on Roku, what else do they have? Oh, there's Netflix. And so it's amazing how just revolving all of this is, and you just get people in the door. And once they're on streaming, they're going to find their way to these other services. And of course, right now, Netflix is the one where they're most likely to find themselves on.
Yeah, I thought, I would get one streaming service, maybe 2, and then I'm still paying a cable bill. I mean, I'm a little bit older, but it seems like I've got like 5 or 6 subscriptions at this point. So it's getting a little bit out of hand. I don't even have any time to watch any of these programs. But so your data is basically a little bit positive, a little bit more positive than it was last week. We got the stock near all-time highs. We'll take that into consideration. All right, Landon, have a great day, bud.
Thanks a lot. Take care and cut the cord, Tom. It's time.
I think you're right.